Good afternoon. Lesson 8. Let's talk about budget, marketing management, and sponsorship. When we say budget is an estimate in income expense for a specific period of the time, you would like avoid the unnecessary expenses. You would like to be able to sleep soundly knowing you have done everything possible to get the value for the money. According to the Philip Coulter, defines the marketing management as the art and science in choosing target markets and getting, keeping, and growing customers through creating, delivering, and communication superior customer value. Just like any other product and service and event requires a marketing strategy in order to achieve its objectives. And when we see the sponsorship, sponsorships refers to the financial or non-monetary investment in exchange for the right to market products and the service to the specific audience. Key terms you need to know. Bookkeeping is the process of the recording business transaction is the chronological order. The records form parts of the accounting information system. Example. An example of booking is the process of documentation bank statement of each month. The next is accounting. Accounting is the process systematically recording the managing financial accounts. An example is of accounting is preparing a profit and loss statement. The principles or practice as systematical recording, presenting, and interpreting financial accounts. And the third is finance. Finance is the art and science managing money. Financials, the management is about sources and uses of funds. You may not be too savvy with numbers. And financing is the process of providing funds for the business activities, making purchase, or investing. And situation such as the blanks are the business of the providing capital business, customers and investors to help achieve their goals. Next is income. Income refers to what remains after expense and taxes are deducted from the revenues. Revenue this represent monies you receive in exchange for the products or service. The formula of computing revenue is the revenues equal to. So what is a unit price? Unit price is the measurement used the indicating price of the particular goods and service to be exchanged with the customer or consumer for money and includes the fixed cost, variable cost, overhead, direct labor, and the margin of profit to sustain the business activities and earning organization. So, a unit price is amount at which as a product or service exchange between the producer, manufacturer, or service provider to the customer of the consumer of the goods services. It's mutual to the both organization and the consumer of organization could not sustain selling lower prices over the consistent period. Here are possible resources revenues are the follows. First is a sponsorship, second is donation, third is the barters, then fourth is the ad placement in your event collaterals, and five is the ticket sales, and the six is the exhibit booth rentals. For the expenses, refers to the fees to need to pay the cost of running the event. You can negotiate the amount to get discount prepare rates, and there are two main types of expenses. Namely is fixed and variable. Fixed expenses. They are the expenses that remain constant irrespective of change in quantity. Quantity can refer to the number of delegates, both the function rooms and meals For example, your office rental will be same whether in the concert tickets you are selling have been sold out or not. In other scenario, administrative employee salaries will be the same whether or not they fill up the convention center with the booths or not. Here's some example of fixed expenses. First is the audiovisual equipment. Second is the speaker. Third is insurance. Fourth is the personal salaries, transportation, entertainment, and car payment and other etc. And variable expenses are regularly changed and may be directly influenced by the choices you make on day-to-day basis, unlike the fixed expenses. Variable expenses are the much less predictable. This isn't to say the variable expenses aren't necessary. Many essential falls into this category. Here are some example of variable expenses. First is the additional sites, rental fees, communication costs, room rates, decor, food and beverage, gifts and tokens, printing and invites and collaterals, advertisement, electrical, gas and water charge, rehearsal costs, shipping, handling and drag, gasoline, office supply, and so on. And other expenses is aside from the fixed and variable expenses. The other expenses are the tax, service charge, gratuities, and accruation contingency funds. Tax is a quotation for the meals and the rooms. Usually have the notation plus tax and the gratuities or plus tax and fees. These are the quoted in the percentage rather than in the peso amounts and that can be subject negotiation with the venue management. Service charge and surcharge. Service charge are the bill by facilities and service providers to the offset labor costs or equipment maintenance, while surcharge are imposed to cover extraordinary incidents such as the rising fuel prices. And the gratuities, these are defined as the favor gifts usually in the form of the money given the returns of for good service. It's computed at the 15 to 20% of the total cost of service. It's not a common practice in the Philippines, but this should be the budget in additional to service charge. Attrition contingency fund. This refers to a clause in the contract requiring a minimum guaranteed number to ensure that hotel earns the expected revenue from the meeting in the terms of rooms or food service revenue in case the event falls below the expected numbers. For example, if the reserve is 100 rooms for the event and only 80 those rooms were used, the venue, usually a hotel, can invoke the attrition clause and bill you for the 20 rooms are remain unused. So, yun nga, kailangan mo talaga siyang bayaran. Kasi nga, 100 rooms yung reserve mo eh. Tapos 80 lang yung nagkaroon ng laman, 80 rooms lang. So, yung 20 na yun, kailangan mo pa rin siya bayaran. And income and expense report. Financial statement give the status of your financial activities at the certain point in the time. There are three types of financial statement. First is the balance sheet. Balance sheet is to show asset, liabilities, capital, business, or the event at a specific date. The asset of the company must equal the sum of its liabilities and equity. The formula is the asset equal to liabilities plus stockholder equity. So, what is asset? Asset is item of monetary value This includes current and non-current asset and is the listed order of liquidity. For example, you have your current asset which include cash and cash equivalents, receivable, and inventory. For non-current asset can include things like equipment, investment, copyright, and intellectual property. And what is the liabilities? Liabilities is this includes money owned for the debt or expenses. This is also includes current and non-current liabilities. Current liabilities can be accounts payable, current debt obligations, and part of the long-term debt obligations. For the non-current liabilities may include bonds issued by the company, and the long-term debt obligation may also be classified under the non-current liabilities as well. And equity. So what is equity? Equity refers to the shareholders. Equity includes how much shareholders have invested in the company as well the retained earnings. The shareholders equity can also refers to the net asset, which is the total liabilities subtracted from the total of asset. The next is the statement of the cash flow. So, why do you need the cash flow statements? As me, so long you as you actual accounting, cash flow statement are the essential part of financial. So, meron akong tatlong reason. First is they show your liquidity. That means you know exactly how much operating cash flow you have in case you need to use it. So, you need what you can afford and what you can't. And the second is that they show you change in the asset, liabilities, and equity. In the in the forms of cash outflows and cash inflows and cash being held. Those three categories are the core of your business accounting. Together, they form the accounting equation that lets you measure your performance. And three, in the three is that they let you predict future cash flows. So you can use cash flows statement to create a cash flows projection. So you can plan for much liquidity for the business will have in the future. That's important for making long-term business plan. So on the top, that if you plan the security alone the or line or credit, you need up to the date cash flow statement to apply. And a tip, as for the advice assistant, you can always ask the certified public accountant for the accounting, the finance, advice, and assistance. And for the committees, the finance committees works with the audit team and the secretariat with the regards financial decisions. So the next is the financial committee. The financial committee is the tasked with the following responsibilities. So what is a role of finance committee or financial committees? Is the primarily to provide the financial oversight for the organization. Typical task areas for the small and mid-sized group include the budgeting and financial planning, financial reporting, and the creation and monitoring of internal controls, the accountability policies, and outline of responsibilities appears below. For the budgeting and financial planning, first is the development or develops a comprehensive budget based on input from each committee. The next is the work with the other committee in the developing objectives. And the next is the determines appropriate tickets price or other fees Next is the pay all bills and expenses in the timely manner and receives all revenues. And the next is maintains accurate financial records. And the last is the preferred financial accounting after the event, determining net funds raised. So the next is the audit committee. Audit committee is the responsible to this task. So what is the audit committee? That audit committee and consists of non-executive director of the company set up by the board director to ensure that corporate governance and accountability are maintained in the financial reporting and its associated disclosure by the company. So, ba't nga ba natin kailangan si audit committee? As the basic need of the audit committee rises and as discussed earlier, to ensure corporate accountability towards stakeholders. For these various statutes have been amended and made if of it mandatory of the formulation which is as follows. So, ito, papakita ko yung sa screen. So, what you need? First is the ICFR requirements. It is the manager's responsibility to prepare the financial statement, structure, management, adequate internal control over the financial reporting, and verify the effectiveness of ICFR. Next is the Regulation S2X Rule 2207. As per regulation, the independent auditor has to discuss effective of alternative GAAP methods on the financial statements. And the third is NYSE requirements. NYSE listening standard that require to the audit committees to review essential issues relating to accounting principles and the fairness of the financial statements. They also include the significant change in the company selection, the application accounting principles, and the adequacy of internal control, and any special steps adopted in the responsibility to the NYSE terms. Material control deficiencies. Fourth is the NASDAQ requirements or NASDAQ. Listing the requirement states that there should be the adequate disclosure of the audit committee's purposes as prescribed it in star character of the monitoring and accounting, the financial reporting process, and the audits of the financial statements. And the last is the ensure avoiding financial fraud. The committee must ensure the company has the programs and policies to prevent identify fraud. It also must ensure that the organization has implemented the appropriate ethics and the compliance program and establish its reporting on the website. The committee members should be aware to the three main areas of fraud risks. First is the financial statement fraud. Second is the asset misappropriation. And the last is the corruption. If you want to learn about the auditing, you may also consider taking courses offered by the Coursera. And for the audit committee's responsibilities and function. First is evaluate the accuracy of the records. Second is act of the check and the balance for the transaction. And the fourth is the monitor compliance with the payments. And the last is review vendor contracts. So that's my report and thank you. Next reporter please.